009, that's about 45010 in the bank Nifty, and that's where we are. Okay, and Nifty is about 19575 as we speak. So just a few words, okay, about what has happened since this morning, and then okay, we'll navigate okay to what is expected okay for the rest of the day. So quite a lot of people okay would be perplexed with what has happened, but it's not something okay which is not happened before, and this is a situation in the market okay which we've seen okay happen many times okay on a settlement day. Now, I don't want to justify or give reasons okay to what has happened, because the market cannot be reasoned. It's the collective, you can say, the consciousness of everybody who's trading it together, and you can say it's got a mind of its own. And within that, okay, it puts in sometimes moves okay which can be explained and understood, and sometimes okay there are moves okay which we just do not understand okay why they happen and how they happen. All we have to do over here is to trade the message of price and volumes. So into the higher open today, and we'll just drop a Nifty futures market profile chart just to understand okay where we are today. So into the higher open today, this was supposed to be that resistance. So this is the gap yesterday, and we closed okay around that 19456, and we were expecting supply here at about 19510. The market opened exactly at about 19510, and instead of finding supply and coming down okay generally okay to meet this kind of a gap, it's moved upwards. Okay, and what has happened is because of the settlement pressure, the call writing at 19,500 has been put under pressure, and they are the ones okay who liquidated further, creating okay this up move okay which we are seeing. So with that, the market is actually okay gone the other way and hit okay these singles at about 19610, which is the old supply which started all this around the 11th and the 10th of August. So this was the day okay where we had that big booming okay drive lower from this POC, and this created that move to about 19280, 19300, which we saw earlier this week, earlier end of last week. Even on Monday we were at those prices. So this is a short covering drive, and it's happened okay because it is a settlement day, and there's not much okay to read into this. Now if I were a buyer okay on a short covering drive, again okay my messaging over here is very very simple. I would look okay for the buyer to show strength. And how do we know a buyer is showing strength? uh, the only way okay we know for sure is that we get a large sustainable extension. So an extension is a move above the initial balance highs, and that is about 19,575 right now. It was expected to be about 19,555, but then okay the market had to put in a further squeeze, and we got into about 19,575. Having said that, it should have gone to about even 19,600, but it didn't. So this is okay one of the push and pulls of inventory, and when people okay get upside down, stranger things have happened in the market, and this morning okay we saw an evidence of that. So just to be very very clear okay with everyone, we have seen the second day of a short covering run in the markets. Now do not confuse this with demand or fresh buying. This is very very clearly a short covering run of the markets. Even having said that, we still are giving the buyer a chance to show demand above IBH. And if that happens, yes, okay, we can get a further move okay on the upside. But if that does not happen, then okay, expect okay a move down to yesterday's pricing, yesterday's closing, either okay later today or even tomorrow, because short covering is not really a sign of a market which is extremely strong. So just that as a perspective as we begin in, this is expected okay to give supply. In fact okay it was expected to give supply around 19600 level. So anything over here okay if we do get back to, again okay you have reason okay to be careful in this market. For now, The VWAP is about 19,550 zone where we are trading right now. So these A singles come into play only if this VWAP is violated, right? So anything over here below this VWAP, okay, you have a reason to believe, okay, that the market goes down. And then there is this gap and this POC over here, which needs, okay, a visit. So I still feel, okay, that this needs to be, okay, tested again, and the market, okay, spend some time over there. But a confluence of two short covering events is resulted in pricing where it is right now, and which is where we are. So in terms of actionable inputs, it's a settlement Thursday, so there would be, okay, a period of quiet right now. And I think, okay, they would prefer, okay, to do a little bit of writing at that 19,550 zone and keep the market, okay, a little bit tight over here. But I would be look on the lookout for fresh IS signals if they come below this, below the 19,550 zone. And if they do come, there is about say about 19,545, okay, you can take it. There is a fresh down move, okay, coming to about 19,510, and below that we could get back to about 19,476 odd levels. So that's a possibility. Just jot it down, so you can give about 19,545 to the market over here and see how it behaves over there. On the upside, there is, okay, I think, okay, that 25-point move to about 19,575 to about 19,600. If we do get a move above 19,575, which is the current day high, but I'll be careful still around that 19,600 zone. And beyond that, yes, okay, you can freely, okay, initiate long positions, and the market, okay, should be free, okay, to run upwards. So if you see this profile over here, there is a clear run, okay, to this next, okay, higher supply, which is around that 19,750 odd zone. So above 19,600, yes, okay, there is that 150 170 point move, which you can take advantage of. uh, let's focus, okay, on the bank Nifty now. So this is the man of the moment, the one, okay, who's created, okay, all that flutter, okay, on call writers. So again, okay, a similar kind of profile. And over here, okay, in these kind of profiles, 8 out of 10 times I'll either expect open to be right around here at the POC, which was, okay, the HV, and also the market going flat and going down. But instead, okay, we had that higher open, and we squeezed, okay, instead of finding resistance over here, the 44,500 call writer was squeezed right at the open. So in fact, they are down about 100,000 contracts at the moment, and you would not, okay, stay when a call is gone in the money, because you never know how much more it can go. So that is the other reason the market, okay, climbed up as much as it did. This supply did not come in. The call writers covering at 44,500 pushed this higher up, and this is that POC. If you recollect, 45 150, we were talking about a visit over there, and it did not matter. So all eyes, okay, would still be, okay, if this finds supply around that 45 150 zone. Yeah, the RBI day and all that decision making, which happened through that the CRR, etc., and that extra liquidity they had to park, this created, okay, that flutter, okay, on RBI day. And if I were looking at this market at about 44 900, I'll be, okay, very very cautious of creating, okay, any kind of a move over here. So it has to decisively move above 45 150 for us, okay, to initiate any kind of a swing long strategy over here. So swing long, by swing long I mean to go decisively long, biased in the market. This is still a short covering run for me in the bank Nifty especially, and it has come through the misery of a lot of call writers. So they hammered 44,000 yesterday, 44,500 the big ones, okay, today. And that's why, okay, we are 1,000 points up in about, yeah, 24 hours, okay, 10:15 to 11:15 one session. So what happens, okay, up from here, again the same principles of auction market theory, market profile. You want to give the buyer the benefit, and see if he wants to extend. So 45009 is our initial balance high, and you would want, okay, the initial balance high to be taken out by the buyer, and even if it does that, he still has to take out that this seller at 45,150. So failing to do that, we can say confidently that this was a short covering move which was not dominated by new demand, and the market, okay, does not really do well, okay, when it has short covering. In fact, there is a saying which goes that short covering weakens market structures. So you would, okay, want to keep an eye out again on VWAP, which where we are currently, and look to see, okay, if sellers initiate, and if they do, we could get that move back to about 44,700 and 44,610, back to that POC. So the old structure and that revisit, okay, is still a possibility. I'm not really the one, okay, who's going to be looking at a lot of long trades, except to see possibilities of short covering, if any. So we had that situation where we went in, okay, with calls in the morning, and that was only because the market, okay, had to adjust quickly to all that inventory which is being built up on settlement day, right? So I hope, okay, everyone's clear about how to approach this today. The adjustment is now done by the market. The market, okay, was caught in a blind, okay, with this higher open and the short covering which resulted. But now, okay, we should look forward to a period of stability in and around VWAP. So this is the Nifty. So we are in the C period, and we have, okay, the B, okay, which is put in a POC, okay, right at the top. So even more reason, okay, for the buyer to initiate above this level, and we are currently at VWAP Depop. So this is a zone, guys. So that just does not mean, okay, that it goes to about 544 or something. Okay, you initiate, okay, a position, just allow, okay, the market, okay, to come in over here. The POC is moved down as we speak for the 30-minute profile. So that's indicator of a responsive buying pattern, okay, coming back into the market. So this is, okay, what happened, okay, with the. I'll first look at that 19400 CE, and let's try to understand, okay, what really, okay, the market was doing, okay, as that short covering was happened. And this is just messaging for us to look at, okay, potentials, okay, later on. So this is the 19400 CE. We've gotten an open over here, and this is, okay, that initial climb up. And I will always, okay, remember these zeros, okay, well, if the market, okay, does come back to them, it turns, okay, into a small support zone. So, and this was, okay, the squeeze, okay, which happened. A lot of short inventory had to get adjusted over here, creating, okay, that upside, okay, we saw. So this happened at about 144, 145, and I did say, okay, it was going to go up to about 179. It's fallen short by a few points, but now that, okay, we are below it, this short covering is done, and there's no reason, okay, to be into that long trade right now. Having said that, so if it goes down again, look for something similar in a 30-minute chart. This is the kind of imbalances which drive markets, guys. Okay, and if you see some of these, okay, coming up either up or down, you have to, okay, get into a long gamma position. If it's a green, then buy calls, and if it's a lot of reds together, then buy puts. Okay, so this is that 19400 CE. Just to understand what happened, okay, in this 19400 CE, so you can track, okay, all this inventory, okay, coming off. This is the open interest 285, 246, 220. So that's dropped about 60,000 contracts over here. Now it's climbing because we have another IS signal, okay, which is developing. Uh, but this was that early covering. Then they covered over here, and all this green over here is the final round of covering which happened. So not much, okay, covering over here. This is an IS candle developing, so they are coming back, okay, into this 19,500 CE to maybe, okay, match, okay, all that writing which they've done in the 19,500 PE, right? So if you look at it, okay, in terms of the shorter 3 minute time frame, yeah, so you can see, okay, that this sell side, okay, is now, okay, beginning to add up again. And mostly, okay, the market, okay, would do this because they want to, okay, protect, okay, that short put position which they've established at about 19,500. So that is already, okay, gone up by about 3,70,000 odd contracts from the open. 3,67,000 contracts has been added on the put side from the open. Hardly add anything, so that, okay, needs to be protected, and some of that money, okay, would be entering back into calls at about 43 to protect, okay, that position, okay, from going a lot off. So this is the structure right now. So just one of 2 points, okay, about this chart. We have, okay, a live open interest coming up over here, and this tells you immediately how much of the open interest is adding or reducing in the strike. So you need not look at your options and etc to have a look at what the open interest is doing. So if you want a bigger picture of the open interest, just move into a 30-minute chart, and you will see, okay, where it is getting cut and where it is getting now. So if you want to have a look at the full picture of where the total open interest is here, but DOI on a settlement day will tell you quickly, okay, on this very chart where the buying and the selling is happening. We can look at that 19,600 P, guys. The market is convincingly broken below the VWAP, and that play, okay, down to about 19,500 is well and truly on at the moment. So that 19,600 PE is about 91 right now. Spot is about 9,520. So that's about 10 points of premium. Okay, is still there. But you'll have to give this, okay, a little bit of time. So you can buy that position over here at about 91, 92, 19,600 PE. And you'll have to, okay, keep that stop, okay, a little bit around that 60, 62 zone. Let's trade, okay, for that visit down to about 19,510. It may not come in that C period. The D period is definitely coming in, but the market is now showing early signs of what we've been discussing, that it was a short covering move, and with a little bit of a wider stop loss, because there's still that play of the market going flat here at about 19530, points here and there. But anything okay over here, I think okay, there is a candidate for this to there is a case okay for this to go down to about 19500 levels again. You just need a little bit of a wider stop loss over here in the 19600 PE. Say about 62 okay would be the right stop loss. It's a little bit more on the higher side uh, compared okay to what we do. But just have to okay if you want to take this trade. I do feel okay that this has to move up now and come back to about 120 and maybe okay 140 later in the day. That's what okay I'm looking at. So I'll be into this position with a stop loss of about 60 and trade for a visit down to about 19496, 19510, 19496, and then 19476. That's what I'll be looking for in the 19600 PE. So let's see okay how this evolves. Okay, you can make this out from here even in the Nifty futures. So there is this added okay supply okay which is now okay beginning okay to exert pressure. The buyer is trying here. He's not managed. In fact, okay, let me just pull up okay the 19600 PE chart. So this is where we are. So this is the buying, okay, which is of interest to me, okay, which is coming in about 1992 order levels, and you'll have to okay keep a stop loss okay below these numbers. This is that old buying, okay, which is coming at about 70. So all this buying, okay, was the you'll have to keep a stop loss okay around this level around 60 62 where this previous set of buying is, and for this okay trade to be there. So it looks like a longish period here in the 19600 PE, but subject okay to this market okay not going back above 19560 now. In fact 19557, we should be looking at a move lower to about 19500 and 19495 from here. So I know, okay, I'm sounding a little bit like a broken record, repeating the same things, but there is a trade opportunity over here, which I don't think so any of you should miss out on. And the same thing, okay, goes for the bank Nifty. It's there, okay, actually still at that VWAP, but could come in about 100 points lower and come back to that 44,780 zone, 790, 800 in the morning. Okay, it looked like okay the market would end its move over there, but then it got fresh legs over there. So a retest of that level is due. So broader idea about how the market adjusted. So this is our spectrum. Yeah. So this yellow MVIS line, okay, climbing like this, it's always gonna tell you that the market is adjusting inventory. Okay, so this was reasonably flat all through yesterday, and in the morning, okay, it started climbing. So it always tells you, okay, that the short call inventory was coming out of the market, and the market, okay, is adjusting inventory that way. So now it's gone flat, so they don't need to adjust. So all that adjustment was done, and they are pretty confident of the market staying between 19600 and about 19500 for now. So that's the Nifty, and we'll see, okay, how this manages itself later on in the day. The Bank Nifty. So again, okay, you can see that quick adjustment being done right at the open. All this yellow will tell you, okay, that the market found itself a short inventory and had to quickly adjust to that short gamma position. And now, okay, it is done that. That is why, okay, this yellow line is flattish over here. So you can trade, okay, to it now, knowing, okay, that the market, okay, wants to stay between 45,000 and about 44,600 on the lower side, right? So a period of quiet due. The morning, okay, short covering and adjustments are done. So the call inventory started to rise up again. The put inventory is coming down a bit. This is the NTM OI change charts where you can see, okay, your spectrum ranges and the changes over here. So we focus more on NTM because, okay, this is, okay, where all the inventory is, right? You really, okay, do not see a lot of big inventory for further out of the money strikes. So if you look at everything in the market, this is the open interest picture, the lower one, DOI and OI. The upper one, okay, is the net added from the open. So you'll see, okay, this inventory is maximum, okay, at the money and near the money, okay, very close, okay, to where the current price is, and it's virtually, okay, nothing in weekly contracts out of the money. So 50,000, 60,000 here at about 19,850. These are not market movers, but the market, okay, is going to move, okay, based on what this inventory is doing. So it makes sense, okay, to track only the near term inventory, and this is something, okay, which happens in the Bank Nifty as well. So if you see all this inventory, where the current pricing is of the market, it happens over here. So 4 lakhs contracts, 5 lakh contracts, 1 lakh 90. But look at everything out of the money. There's virtually nothing over. These people, okay, have written a lot of 45, 500. That's why this is high. But other than that, not really a lot, okay, in terms of outside inventory over here. So the reason, okay, the Bank Nifty, okay, does this is because there is a lot more spread play in the Bank Nifty. So these out of the money positions are generally used to bring down the margins, the requirement, okay, of positions. So that's why, okay, in the Bank Nifty it's a different case, but in the Nifty it's all the NTMOI which is moving in. Before I close, okay, let's look at the actual open interest picture of the market. So the call writing is going up again at about 19,600. They are confidently writing it. But if you bring this thing down to the A period, this is, okay, how we started off. So that 19,500 was really very high compared to the puts at about 9:15 in the morning. And this is the one, okay, which got squeezed. So it's down, okay, a lot, and the put open interest is come down. So the put open interest, okay, is just reduced a bit, and the 19,600. But this is gonna keep changing as the market moves. It is gonna keep adjusting. So we need to pay attention to what happens in the G period and the H periods, and then of course, okay, K is got to make its own choice. It's gonna have a life of its own. So we'll be looking forward to some excitement in the K period, okay, for sure. Right, this is the Nifty, and the Bank Nifty is over here. So this is how we started. The 44,000 PE was there, and the 44,500 was the bigger one over here, about 3 lakh odd contracts. And if you come back to where we are right now at 11 a.m., the 44,500 is virtually not there. 1 lakh 87,000 contracts. They're adding now at 45,000 CE. So confident, okay, that they will hold on to the 45,000 big round number over here. This is the option inventory place. So the current gamma positioning does indicate, okay, that 19,500 is turning into a base, and 19,550 is got a slightly upper hand over here in terms of the Nifty gamma price. This is dynamic. This will keep changing, and yeah, the gamma positioning is showing, okay, that 45,000 may turn into a big resistance for later in the day, right? Just so to sum up, okay, what we've been talking about, the initial adjustment of inventory is done now. If there is a play for now, considering, okay, that VWAP is not showing a lot of demand, okay, coming back, there is a slow play here and a case, okay, to go back to about 19,500 odd levels from where, okay, the inventory adjustments began. The buyer has to do the job now. He's been given an open season, okay, to ride the market, but we need to see evidence of a short covering run, of a extension in the D and E periods for us to be knowing for sure that the buyer, okay, wants to move the market from here. So I'll leave it over there, guys. I hope, okay, everybody is clear as to what to expect for the rest of the day. As and when, okay, the situation develops further, let's communicate via the text chat. So signing off for now, guys, and I'll join you in a bit in the text chat.